Good morning, Paul Georgi from Allendale. It's March 10th, 2011. The grain markets this morning are under pressure, and macro funds selling pretty much across the board here this morning, pushing markets into support area and also pushing it into some stop areas in the bean market and in the corn market as well. But we did get the USDA report out this morning, and that's what everybody's waiting for and was hoping to get some support and some excitement out of again. Well, the USDA kept the corn number 675 on ending stocks, bean ending stocks at 140. Wheat ending stocks, however, they did raise. They the last month was 818. They raised that to 843. Trade was looking for a reduction there down to 809, so that might be a little bit negative going into the 9:30 time frame. Other things that are highlight that I look at here this morning, we were worried about soybeans coming out of Brazil. They raised the Brazilian crop 1.5 million tons up to 70 million tons. Kept the Argentina crop the same at 49.5, and the China soybean crop they raised to 15.2 from 14.4. Corn numbers, they raised the Brazilian corn production from 51 up to 53. Kept the Argentina number the same at 22 million tons, and did lower the Mexican number from 24 down to 22. So the world ending stocks numbers raised the corn ending stocks for the world to 123.1, just a slight increase there. Wheat ending stocks numbers, they raised that by about 4 million metric tons up to 181.9, and soybeans pretty much the same as far as the world ending stocks go. So not a lot of we're not going to get a lot of support out of this report, I'm afraid. So we're going to go back to looking at other things that are going on in the market and what's pushing this market down right now. We're seeing funds selling across the commodity complex here this morning. We've seen gold under pressure, cotton, sugar, livestock even were under some pressure here this morning, as well as grains. And this is based on some weak trade data out of China here this morning, showing that their imports of soybeans were not as much as expected. Also, we've got the fresh euro debt concerns here this morning, giving strength in the dollar. The dollar up about 50 points right now. Crude oil down about 150. Those factors, I think, are dominating the traders' thoughts right now and reasoning and saying, well, I want to take profits while I can. There's still some there, so we're seeing some pressure because of that. Other news, yesterday, two senators proposed a law in the Senate to repeal the tax credit of 45 cents for ethanol, and they wanted that to take place immediately. Don't think that will have a chance. However, what it is doing is drawing attention to the situation, and probably gives us an indication here that it's going to be difficult to have that tax credit continued after the end of the year when it is due to end. We also had export sales out this morning. 700 to 900 was the expectation for corn, came in at 776. Soybeans 200 to 400,000 tons. We had 470,000 tons exported there, sales, and wheat 800 to 1 million tons. 657. So a little weak on the wheat exports may also give us a little pressure there, and we've got reports that the Wilmington group out of Wilmington, North Carolina, has imported anywhere from 100 to 200,000 tons of Canadian feed wheat. The exciting news here this morning is in the cattle complex. Late yesterday, packers come out and bought cattle and bought them aggressively, paid $5 higher than last week, had a high of 118 in the South and Texas and Kansas area. with a 190 price paid in the north. So a very aggressive move by packers there. Cutout values, choice up 160, select up 87. Reason for the strength is demand. Export demand has improved and caused packers to get cattle, need cattle. The higher prices here have allowed feedlots to stay very current, and we're in kind of a hole here where we need the cattle don't have enough weight on them, and packers have been very aggressive about buying cattle here the last few days. The pork, we've got cutout value there down 42. The packers are expected to increase their slaughter for Saturday, which may help support nearby cash hog prices. Futures rebounded yesterday and continued up after the big turnaround day we had there on Tuesday. So the meat complex looks a little better from a trading standpoint. Certainly an uptrend is intact there, and with the improvement in export demand has kept supplies relatively tight here in the U.S. So overall, expect grain markets to open lower here this morning. We'll be monitoring the fund activity. If they come in and sell some more, I'm sure we'll find some more pressure. But if you look at a corn chart, for instance, a May corn chart, we've went right down to a long-term uptrend support area here. This 690 level in the May contract, I think needs to hold. If we break that, we could find some more stop selling underneath of that. So monitor that very closely. If you got any questions, give us a call here to Allendale, 800-262-7538. Also a reminder that we need your help in getting the planted acreage survey completed. We've got 2 more days that we're gathering information there. We will release that next Wednesday morning at 10 o'clock on a live webinar, so you can log in and attend it live, get the information firsthand at that time. And you just go to our website and log in there and get your registration saved. There, of course, is absolutely no charge. We wish you a very successful trading day. We'll talk to you tomorrow morning. Thank you.